So we'll be going over IRS Form 2441, Child and Dependent Care Expenses. So there are three parts to this tax form. Part one is taxpayer description or information about the persons or the organizations that provided the care. Part two is the actual credit for child and dependent care expenses. And then part three is dependent care benefits. So before we get into the nuts and bolts of this form, it's probably prudent at this point to discuss exactly what qualifies for the child and dependent care expense credit or exclusion. So the first thing would be dependent care benefits. This is a term that's in the form instructions, and this includes any amounts that your employer may have paid to you or to your care provider for the care of your qualifying person while you worked, the fair market value of care in a daycare facility provided or sponsored by your employer, and pre-tax contributions that you made under a dependent care flexible savings account. So your salary may have been reduced to pay for these benefits, and if you did receive these as an employee, they would be shown in box 10 of your form W-2. Benefits that you may have received as a partner would be shown in box 13 of your Schedule K1 with code O. So a qualifying person is any of the following. One, a qualifying child under the age of 13 that you can claim as a dependent. So if the child turned 13 during the tax year, the child is a qualifying person for the portion of the year that he or she was under the age of 13. For example, if your daughter's birthday was July 1st, then your daughter would be considered a qualifying child for the first half of the year. Two, your disabled spouse who is not able to physically or mentally care for themselves and lived with you for at least half of the year. Technically more than half of the year, which means at least half of the year plus 1 day. And three, finally, any disabled person who wasn't mentally or physically able to care for themselves who lived with you for more than half of the year and whom you could claim as a dependent, so either you can claim them as a dependent outright, or you could be able to claim that person as a dependent, except the disabled person had gross income of $4,700 or more, they filed a joint return, or you or your spouse could be claimed as a dependent on someone else's tax return. So qualified expenses also include any amounts paid for household services and care of the qualifying person while you either worked or looked for work. So you can take the credit or the exclusion if all of the following criteria apply. One, your filing status is either single, head of household, surviving spouse, or married filing jointly. There's limited opportunity for married persons filing separately that you can look up in our article. We'll give you directions to get there at the end of this video. Two, the care was provided so that you or your spouse, if you're filing jointly, could work or look for work. If you don't have earned income, you cannot take the tax credit or the exclusion. But if your spouse was a full-time student or disabled, there may be mitigating circumstances. So three, the care must be for one or more qualifying persons. Four, the person who provided the care was not either your spouse, a parent of your qualifying child, or a person whom you can claim as a dependent. And then finally, five, you report the required information about the care provider here in line 1, and if you're taking the credit, information about the qualifying person on line 2. So before we get into part 1, let's take a look at some of this information at the top of the form. So if you're using tax software, your tax software should automatically carry down the taxpayer name and social security number. But then there are these questions marked A and B. So in box A, uh, there are certain criteria for married persons filing separately. Generally, if you don't meet these criteria, then you can't claim the credit. But if you meet those requirements and you're filing separately, you can check this box. The requirements are that you be considered unmarried for purposes of claiming the credit, which involves A, living apart from your spouse during the last 6 months of the year. B, your home was the qualifying person's main home for more than half of the year. And C, you paid more than half of the cost of keeping up that home. So if you meet all of these requirements and the other requirements mentioned earlier, then you can generally take the credit or the exclusion. If you don't meet all the requirements to be treated as unmarried, you probably cannot claim the credit, but you can claim the exclusion if you meet the other criteria stated separately. So if this applies to you, you would check that box. For box B, if you or your spouse was a student or was disabled during the tax year and you're entering deemed income of either $250 or $500 a month based on the income rules in the instructions, then you would check this box. In our situation, we'll just assume that neither of these are the case. So we're going to go ahead and go. Now, at part 1, you can list up to 3 care providers. If you have more, you would need to check this box and then basically attach a document that has essentially the same information. So for each care provider, you're going to enter their name in column A, the address in column B, the identifying number, which can either be a social security number, individual taxpayer ID number, or an employer identification number in column C. Whether or not the care provider was also your household employee, that would be in column D, and then the amount paid for the care. So, and then in the further instructions indicate that you would include amounts that your employer paid to a third party on your behalf. It doesn't matter when you incur the expenses. You would just, I see a quick note that I need to take care of. There we go. So once we complete this information, now we decide whether or not you receive dependent care benefits. If you did not, you only need to complete part 2. If you did, you would complete part 3 next and then come back to part 2. So we're going to complete part 2 as if we're doing this on our own. And then we're going to go through part 3 at the end in a separate situation. So we'll cover all of these, but let's just assume for right now, we did not receive dependent care benefits from our employer. So this would be dependent care benefits that provided through your employer or your corporation, your partnership, what have you. So let's talk about the information about your qualifying person. So in this case, John Doe and his wife Mary, they have 2 children, Susan and Timmy. We've entered their information. They're both under the age of 12. And they spent $5,000 for child care for each of them. You would add these up, add the numbers up in column D, but you don't enter more than $3,000 for one person or $6,000 for 2 or more people. That's not the maximum amount of credit. That's the maximum amount of expenses that you can claim as a credit. We'll get to calculating the credit in a moment. So you enter your earned income in line 4 for purposes of earned income. Basically, there are some additional instructions. You would need to include certain amounts from your tax return, certain amounts that had been excluded as foreign earned income, amounts that were on Schedule SE or Schedule C, non-taxable combat pay. We kind of outline all of the requirements here in our form instructions in our article, so you can understand exactly what this means. It's different from just pulling a line from your 1040. So there are some adjustments you need to account for. In line 5, if you're married filing jointly, you would enter your spouse's earned income. Otherwise, you would just enter your own number from here to here. And in line 6, you're going to enter the smallest. So these lines right here basically help you determine the amount of expenses that you can possibly claim towards a credit. So if John's wife Mary only earned $4,000 during the year, then the maximum expenses that you would be able to claim would be $4,000. In line 7, we're going to enter the line 11 amount from your tax return. This is adjusted gross income. So in this case, let's just say that that's $115,000. In line 8, we find the decimal amount that applies to this line 7 amount, which in this case is 20%. So we'll put that number in here, and then we'll multiply line 6 by that line 8 amount, and we arrive at $1,200. So this is the maximum possible credit that we could claim, but we do need to walk through some additional steps. So in line 9B, if you paid 2022 expenses in the current tax year, you would have to complete worksheet A from the form instructions. Then you would enter that amount here. We're going to assume that the does did not have to worry about that, so we left that blank. That's a 0, and we're just going to enter $1,200 here. The tax liability limit is the total amount of income tax liability. There's another credit limit worksheet in the form instructions, and basically once you work through that, then you determine, that allows you to determine whether or not you aren't allowed, or whether or not you are allowed to claim the entire credit. So this is a non-refundable tax credit. If this amount were only $800, then you would not be able to claim the full tax credit of $1,200. You would simply claim the $800. So in this case, we don't have to worry about that because our tax bill is larger than the credit that we're trying to claim. I don't see any information that indicates that you can carry over any unused credits to a following tax year. Let's go to part 3. Let's transition. So basically, now we're back here, and we're going to enter yes. So disregarding what we just did in part 2, let's go to part 3 and continue from there, and then see how that impacts the part 2 number. So in line 12, we're going to enter the total amount of dependent care benefits that we received. Let's just assume that our employer paid the $10,000 on our behalf. This would be shown in box 10 of your Form W-2, not including your wages that are in box 1. If you carried over any amounts from the prior year and you used it during the grace period, you can enter that here. And then if you forfeited or carried over any to the future tax year to 2024, you would enter that as a negative number here. And you combine all lines 12, 13, 14, and you get, let's see what, we made that adjustment. So let's just say 11,500. So now in line 16, we're going to enter the total amount of qualified expenses for the qualifying persons. Let's make this $10,000. but we're going to enter the smaller of a line 15 or 16. So in this case, we're going to enter $10,000. In line 18, we're going to enter the earned income for John and Mary Doe, just like we did previously. So we've got the 80,000, the 40,000. We're going to enter the smaller of line 17, 18, or 19. So in this case, that would be the line 17 number. So that's $10,000. We're going to enter $5,000 in line 21. If you're married filing separately and you're required to enter your spouse's earned income in line 19, then you would enter $2,500. So in line 22 is any amount from 12 or 13 from a sole proprietorship or your partnership. If it were, well, sorry, we'll get to that in a moment. So we'll say no. We'll enter 0 here. We're going to subtract line 22 from line 15. So that gives us 11,500. Now in line 24, we're going to enter the smallest of lines 20, 21, or 22, which in this case would be 0 because we did not have anything from a partnership or a sole proprietorship. But if you did have deductible benefits, let's just say that this number was $3,000. Depending on which one you file, you would include this on line 14 of your Schedule C, line 19 or 28 of your Schedule E for your Form 1040, or line 15 of your Schedule F, whichever one is applicable. And we'll put links to the videos and articles we created about all of those tax forms in the show notes. Excluded benefits. So we entered no in line 22. We're going to enter the smaller of either line 20 or 21. In this case, that is $5,000. That's the maximum that we can exclude. So the rest of this is taxable benefits. So that happens to be $6,500 of taxable benefits. We're going to enter this on our Form 1040. Now, if you're also claiming the child and dependent care benefit or credit, you can complete these items below, and then we'll take certain figures from this section and put them in part 2 above. So $6,000 we've entered into line 27 because we're talking about 2 or more qualifying persons. We're going to add lines 24 and 25. That gives us $5,000, and we'll subtract the difference. So basically what we're saying is we excluded $5,000. So now we can calculate a tax credit on the remaining $1,000. If there's nothing remaining in line 29, then you have to stop. You can't take the credit. You would have to go back and include this in income and then calculate the credit accordingly. Complete line 2 on page 1 of this form. So line 2 equals $10,000. We take the total of column D and we enter that down here. That's $10,000. So don't include in column D any benefits that we showed on line 28 above. So these would be separate numbers if we were doing this in real life. And then we're going to take the smaller of line 29 or line 30. So you would enter this on line 3. So you would calculate this based on the $1,000 figure that we calculated here. You would carry this all down here, and basically you're able to take a $200 credit. So that's how you would coordinate the tax credit for the child and dependent care expenses and exclusion of dependent care benefits that were provided by your employer. So that's all we have for this video. We break this down and provide some examples in our article, which you can find on our website. Simply go to teachmepersonalfinance.com, type in IRS Form 2441, and you should see our article appear. So if you like our articles, please subscribe to our newsletter. If you like our YouTube videos, please subscribe to our YouTube channel. And if you have any questions or comments, or if there's a topic that you'd like to see discussed in an upcoming video, hit me up in the comments section. Thank you very much and have a great day.